So I'll be starting now. So pay close attention, and I'll not be speaking very loud because where I'm staying, I'm not allowed to shout. So because this is in the night, so you try and try to grab fast. So I think that will be also. I'll be starting. I'll be starting. I told you I'll be teaching you a concept, a smart money concept called liquidity. Okay, let me give you an introduction before we go to the actual chart. Okay, normal retail traders, normal retail traders they try to set stop loss. They try to, if they are trading normally, you set stop loss. So see, liquidity simply means what? Where stop losses are, predicting where stop losses are. Okay, now as a retail trader, let me summarize everything now. As a retail trader now, if you are trading support and resistance, if you are trading resistance now, for example, if you are trading resistance, for example, definitely your stop loss will be just above the resistance level, and if you are trading support, your stop losses will just be below the support level. That is just the simple concept of liquidity, where money is in the market. And this concept is very, very important in smart money trading. Because why? I remember I told you that smart money trading goes against retail trading. So I remember the fact that I told you that for this thing to lose money, for if retail traders are losing money, that is smart money concept traders are earning money. So how did they earn money? By what? Making price to hit the stop loss of what? Retail traders. It's as simple as that. It's as simple as that. Okay, I don't know if you still understand what I'm saying. And remember, I told you. So that is just the simple concept of liquidity. Predicting as a retail trader, as a smart money concept, you think like bank. They are thinking, okay, these are the possible areas where potential retail traders will put their stop losses. In a trend line now, price making higher highs and higher lows. Those higher highs and higher lows are potential what? Are potential stop losses. I don't know if you are getting me. I'll go into the chart so you'll get better understanding of what liquidity is. So anytime and you can is easily spotted in the market. It's easily spotted in the market. I'm coming so that we'll go to live example so that I'll explain better. So that is the simple concept of liquidity, understanding where the stop losses are. When you are trading as a retail trader, support and resistance level, those are liquidity areas. Those are where orders are stacked in the market. I'll I'll let me let me I'm coming now. I'm coming. I want to set something on my phone so that 30 minutes of inactivity. Okay, so we can start. Okay, now explaining the concept of liquidity. Let's use a live example. Let me use a live example. Let's go to the euro USD, the euro USD, the euro USD. Let's go to the euro USD. Okay, now remember I told you liquidity, where orders are stocked in the market. You need to think like a retail trader, because why? You are trading like banks. So, and since you want to go against retail trader, you need to think like retail trader. Let's go to the daily chart. Let's go to the daily chart now. Okay, now I'm coming. Let me delete all these things. So let's go back. Okay, starting from here now. Liquidity. Okay, now. Okay, now. Let's go back. Okay, now. Let's go back. I'm using MetaTrader. I'm not using TradingView, so there are some explanations that might be a little bit hard. If you look at this zone here, okay, let me indicate it. You can see a potential support level. Let's go back. Why is my phone hanging now? Okay, now looking at this level now, you can see this potential level of support and this potential level of resistance. Those are where orders are stacked in the market. Let me use a lower time frame. so that we explain better. So that we explain better. Okay, now this is a very good example. Look at this trend line here. Look at this trend line here. Look at this trend line here. Look at this is a very good example. Look at this trend line. So anytime you are seeing higher highs, higher lows, all these points, let me indicate the point. Let me indicate the point. Let me indicate the point with vertical lines. Let me indicate the point. This point, point one. Let me take in it so get better understand. I want you to understand this concept fully. So if you can understand liquidity, we are we have started your journey. So this point, that lowest point, starting, this is a trend. This is a trend. So we mark all those higher highs and higher lows. You know, in a trend, if in an uptrend, price make what higher highs and higher lows. If in a downtrend, price makes lower high and lower low. All those points are what are where orders are stacked in the market. People, retail traders will be putting stop losses there if you are thinking like retail traders. And you can see what did price do. Price went all the way up. Price went all the way up, manipulated, then what went down. This place that price is going down, this place, this area, let me give you the area. This area this area this area all the way from here down to this place. You can see what price took out all the stop losses here. All those traders that are putting stop loss, all the stop loss that was here at the lowest point here, stop loss that was the lowest point here, stop loss that was this place, stop loss that was at this place. Price took all of them out after manipulating up. We can see, we can see. Let me give you another example. Let me give you another example. Okay, now we can see, we can see. Okay, let me give you another example. Let me give you another example. This concept might be a little bit confusing now, but when we start, you will understand. You can see at this point, what are you saying? This is what at this point, at this point from here to here, you can see what, orders in the market. So definitely from this point, I'll be using this thing because it's meta trader, so you might not get full understand. From this point here, immediately price gets to this point, there will be stop losses just above the high of this point, just above the high of this. They will be stacked. They will be as in orders will be stacked there because that's the way retail traders think. Because they buy, they sell at resistance. So if they sell, they will just put their stop loss just above that resistance. Those that stop losses are called orders. That is what we as SMC traders are looking for in the market. It's as simple as that. This that is just the concept of liquidity. It's as simple as that. That is what we as retail traders we are looking at. Okay, now seeing, look at price came here, it retested. So the next time price will come to this point, look at what price did. Price manipulated as if it then, who is calling me? Oh, hello. Okay, sorry for that. I don't know the number. Okay, let's continue. Looking at it now. Oh, oh. Oh, sorry for sorry for that. Sorry for that. I don't know who is disturbing me. I don't know. Let me check. Okay, let's continue. Let's continue. Okay, now, so that is just the simple concept of liquidity. You will be looking for stop loss as a retail trader. You'll be thinking, you'll be looking for where there are stop losses in the market. So that is where you will be aiming. That is where you'll be looking for. You'll be looking for. So there will be manipulation. There will be manipulation. There will be manipulation. I ought to draw some diagrams for you, but I don't know. I don't know how to draw them. Okay. Okay. Let me see whether I'm with my notepad here. If I can draw them, but I don't think I'll be able to draw them. I don't know. I don't know. I'm not with my notepad, but I will try and see to send them for you. But just understand the concept. Just understand the concept. Understand the concept. The concept of liquidity. Liquidity just simply means you will think as if you are looking at the chart, you will think where you are seeing consolidation. Consolidation, when there is consolidation, there will definitely be the support and resistance level. Those levels are high place. They are high place where price can manipulate the market. They are high places where price can manipulate the market. They are high places where price can manipulate. Let me look for a very good example. Let me look for a very good example. This example is very good. This example is very good. You can see there was manipulation all the way here. Can see price dancing. Then what the price do at this point, price went up at all the what? Price went up at this point, at this point here, at this point, price went all the way up at all the stop loss, took out all those orders, made money. Then what the price do? Came down as if it will what? As if it will retest this place. Price didn't retest. That's what we call manipulation in the market. Then finally price broke up. So as price is going up, you as a retail trader, what will you be thinking? Okay, price has broke my support level. I'll be thinking of break and retest. I'll be thinking of what? Simple strategy. I'll be thinking of break and retest. What the price do? Price came up, came down, as if it will retest the level, then falling back, manipulating the market, eating all those orders. Okay, now imagine you as a trader, you if you are looking for break and retest, immediately price came here, what? Your stop loss will be what? Just below this point. Below this point, because you'll be looking for it to come here, retest, then go up. But price didn't do that. Price came here, reacted as if it will go up, then what? Took the market down. Then all those orders that were here, all those orders that were here in those trend lines, that was here, that were here, that was here, all those orders were taken up to this place. Then what the price do again? Took the market up. So as the market was going down, okay, you'll be expecting retest to, yeah, you'll be expecting retest now to this zone, because this is a resistance zone. You'll be expecting retest now. Since price has come down, you'll be expecting price to come here, retest, then go down. No, price just came here, brought 100 candle, then fired up to this place, then fired up to this place, creating an imbalance. I'll be explaining that in another, that is another topic. Creating an imbalance, then feel the imbalance, then can see price is going down. That is just what we call manipulation in the market. And you now, so to get better understanding of manipulation, you need to go and sit down, you observe the market. Okay, what do I mean? You now as a retail trader, you think, what are those things that a retail trader use? Where Number one, I just gave you two. You need to go and do research on the rest. You can't expect me to teach you everything. I give you only two. There's what we call divergence. Divergence too is there. Double top, double bottom is there. Head and shoulder manipulation is there. So all okay now for double top, the stop loss will just be below those above, sorry, those double top. Double bottom stop loss will just be below those double bottom. So you go and do your research. So anytime you are seeing manipulation, you see that price from double top, price didn't even just reacted and broke that double top, you know that there's smart money concept there. That is just the simple concept of liquidity. And why liquidity is very, very important, is because anytime we use liquidity as extra confirmation, we use liquidity as confirmation in smart money concept. Anytime we see price approaching our targeted zone, our order block, I'll be explaining that later. Anytime we see price approaching our order block, we are expecting to see one form of liquidity. We are expecting to see one form of liquidity. That is just the simple concept of liquidity. We are expecting to see one form of liquidity. So I don't know if you are getting me. I don't know if you are getting me. So that is just the simple concept of liquidity. Liquidity is just about you as a trader. You'll be thinking in the with the retail perspective. Okay, what where are those areas that retail traders will put their stop loss? So if you know those areas that retail traders will put their stop loss, the next thing to do is to know that price will definitely break those stop loss. It break those stop loss and manipulate that place. I'll be explaining. You'll be getting full understanding, but you need to go and sit down and observe the market and see what is going on. I just used one place as example. Let me check if I can see any example. And the beauty of this smart money concept is that you can use it on any time frame. 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 Um, okay, okay, okay. Can see this place. Can see from this place, price started creating what? This is a trend line, higher highs. Anytime you are seeing higher highs and higher lows, those are potential liquidity areas, because orders are stacked. Because definitely there's stop loss at this place. 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 So why? Because those are lower lows. Because price is falling downtrend, so those are lower lows. So smart money concept is waiting to eat up all those stop loss. And you can see price came here, started eating up the stop loss, ate up the stop loss to till this place. Then what? This stop loss that is eating now is creating or creating pending orders here, which are what? Stop losses. They're creating stop losses here, stop losses here, stop losses here. You can see price ate those stop loss all the way down. So that is just the simple concept of liquidity. That is just the simple concept of liquidity. You must understand how liquidity works. If you can understand how liquidity works, you understand how you understand why this liquidity is very important. I'm telling you, why it's important is that it act as confirmation. It gives you targeted area where your take profit will be. Because I've told you, when price is approaching your demand zone, supply zone, then you will now start looking for place of liquidity where price will go and eat, place of stop losses where price will break through. That is what you will be looking for in the market. It's just as simple as that. It's just as simple as that. I don't know how to explain it any further for you. You can see this is a very good example again. Can see here. Can see here. This is what. This is what. This is what. This is what. Can you see? Can you see? There is a very good manipulation here. You can see price came here, created double bottom as if it will go up, created this consolidation now, up down. This consolidation. There's consolidation here. What did price do? Manipulation. Price broke down all to this place as if it will go up. Can you see? Can you see? Price broke down as if it will come. Sorry, I said sorry. Price broke down, ate the stop losses that were here. As if price will what? Come here, retest, then go down. Normal break and retest strategy that you know. What the price do? Price broke through. Simple. Price broke through. This breakdown has already eaten all the stop losses that were here. Then this break up, because normally if they enter here, their stop loss will be somewhere at this point. But can you see price broke up, ate all those stop loss, came down. And you can see here again there's liquidity here from this point till this point. You can see there's liquidity. So as a retail trader, I'll be expecting price to what break, price to what rally down, then break through those liquidity, hit this liquid, because there's stacking orders here also. There's stacking orders here. So I expect price to come here, break through this liquidity, hit all the stop losses that are there, then go up, then manipulate, then meet another block, probably at this point, then come down. Let's see what price did. Price haven't got there. Can see price just rallied down. Rallied down up to this point, met this other block here, start going up. Why? At this point now, I'll be looking towards to buy. Why? Because there's order here. I told you there's order. This is a trend line, so there are definitely liquidity at all these points. You can see all the points I'm marking. What the price do? Met another block, start what? Eating all this liquidity. So simply how we use liquidity is that when price is still at this point, I'll be looking, okay, this place is liquidity. This place, you can see double top here. There's liquidity here. There's liquidity here. So I expect price to come back and eat all this liquidity. So when price met my supply zone here, price came all the way up and ate my liquidity here. It's as simple as that. You can see, One, two, you can see price broke through direct, as if this place now, you can see creating lower low. You can see here there's liquidity here. From there are just different forms of liquidity in the market. You can see now, okay, immediately price is going up. I'll mark this place now is my liquidity point. This place is my liquidity point. This place is my liquidity point. So I expect price to get to, after going up, to come back and eat all those liquidity. And you can see what price did, went down and ate all those liquidity, and ate all those liquidity, ate everything, then start running up. So as it's running up, I'll be expecting price to come back and eat all this liquidity. And what did you see price did? Price came back, ate this liquidity, but didn't eat this liquidity. Liquidity act as what? Order block. Now I'll be teaching you about that. Act as, because this is a supply zone. Met the supply zone, start taking out all this liquidity again. So that is how price does and takes out liquidity in the market. Understanding this concept will make you understand how market moves. You can see, okay, now you can see that price moved from here. So all these places now, they are what? They are potential liquidity. All these places, they are potential liquidity. You can see, can you see? Can you see what I'm saying? I didn't even know. Can you see? Price rallied back up, eating all the orders that were here. It's as simple as that. Rallied up to meet this place, to meet this place here. You can see, I'm just using liquidity to explain market structure for you. How far? So if you understand, that is just the concept of liquidity. That is just the concept of liquidity. That is just the simple concept of liquidity. Simple concept of liquidity. That is just the way liquidity works. Liquidity works. Okay, now see, now price rallied up. Price rallied up here. What? Create higher high here, lower low. So all these places now, one, can see that this place now formed what? Formed support or resistance, these two places. So normally retail trader at this point, they will be expecting price to come here, then bounce back up. They will be expecting price to come here, then bounce back. What the price came here, can see this, can if I can see that immediately price came to this zone, went up as if it will retest, then immediately it took out all the sellers that were here, took out all the sellers, all the stop losses. I say sellers, all the stop losses that were here, just to rally down, just to rally down. So that is just the simple concept, simple analogy of what? Of liquidity. Knowing where stop losses are in the market. And I've told you, it's not only support and resistance, it's not only trend lines. There's break and retest, there's double top, there's head and shoulder liquidity. There are just many liquidity in the market that price will take. I just use the basic ones to explain. There is divergence liquidity. Anything you shall know that retail traders use to put their stop loss, know that there is liquidity there. That is just the simple definition of liquidity where orders are stacked in the market. So I think that will be that. So tomorrow I'll be teaching you two or three topics, but one of them will be market structure. Why it will be two or three? Because you already know market structure, so I don't need to teach you much on market structure. So that will be market structure and probably imbalance or mitigation, one of those two. Or no, I'll teach you market structure and order block. Market structure and order block. That's what I'll be teaching you tomorrow.